Hello and welcome to Caching Waves. This is a trade update and Elliott wave analysis of ICP. I got in this trade setup yesterday. I want to go over what's happened overnight. Got in right at this area. I've considered this potentially finished as an ABC with a flat in between, and we were looking for this move up at the between the 618 and the 786 extension of this wave 1. I want to show you how things can change. I'm leaving my trade setup currently, and why we made this decision, and where we can expect to change targets, because this clearly has to be relabeled. Now this is my primary down on the 15-minute, that we need one more wave up. Alternatively, we might need one more wave after the fact, but I'll show you that in a moment. So the only way this is considered done, and we need further downside, lower lows, is if the fifth wave is over here and this was an expanded diagonal to end the trend, which is valid. It's just unlikely. It's a rare pattern to see to end a trend, so I don't consider that the primary. Now if we start selling off here, obviously that would force me to change my mind, and we'd have to call a top over here. Now if this correction gets bigger, and how we would move to the downside is if this is a W X Y over here, then we'd have to relabel that fifth over, and then I would expect us to actually start moving to the downside correctively. Just kind of a slow grind. But because I think we need this move up, I'll explain how this changes things. And I want to show you the rules. It's good to memorize these or keep them in a spreadsheet somewhere and just double check them every time you're in a trade. That's how I put them to memory, and you can quickly deduce options. So the rules have changed recently, if you're not aware, and the main difference is previously wave 3 had to be shorter than wave 1, wave 5 shorter than wave 3, etc. Now wave 5 must be shorter than wave 3, but wave 3 can be longer than wave 1. Basically, wave 3 can't be the shortest. Also, there doesn't have to be overlap anymore between wave 4 and wave 2. So it kind of makes it a little more difficult to track, but just be aware of those rule changes. And if you're unaware of the rules, there's guidelines, but again, you'd get that from the Elliott wave principle on Elliott wave international. But the main ones to focus on is wave 1 of an ending diagonal must be a zigzag pattern. And because of that crazy sell-off yesterday, I just want to show you this. This is either a double zigzag for a wave 1. We can get single, double, or triples. Or this is a leading diagonal in itself. If it's a leading diagonal, we'd expect this to actually be an impulse, where we get our standard 1.618, and then we retrace to the 382, go up to above the 200. So that's one thing to keep in mind. So if we start taking off for whatever reason, I would pull on my fibs, look for the 1.618, and if we pass the 1.618 extension for our third wave, I'd be like, oh, okay, this is most likely a impulse then. But you can see the sketchy nature of this first wave. But if this was a flat A, B, C, if this was a standard ABC and not a WXY, and we're expecting lower lows here, this has to be either an impulse or an ending diagonal. And we've passed the 70% of the move down, so it is valid. But as soon as I saw this, I'm like, okay, we need this. We had our ABC. We need this to turn into an ending diagonal because we only got 3 waves. And it would have to be kind of contracting. And you can see it's not really the right shape. I mean, technically valid, but this actually looks like 5 waves complete down here at the moment. You'll start to notice these patterns the more and more you do this, and shape is very, very important. I've trained my eye for shape more than counting waves. I find it to be way more helpful in real-time trading, focusing on shapes and Fibonacci levels and extensions rather than trying to count 5 waves micro out of this, because you can count things so differently in real time. And one tiny wave changes everything, right? But this is clearly 3 waves to me here as a flat pattern. Move down, ABC, 5 waves down. That's clearly a flat pattern. So I would, if we drop lower, say we fail like we did, and we make lower lows, my immediate assumption is, okay, that was a 3 wave, so we either have a WXY, where I'm expecting 3 more, or 5 waves because we passed the 70% retracement of this wave where we can have a flat. So I immediately think that. And I say, okay, where's my next fib level? Well, hopefully we can pivot here at the 618. That would be a WXY because we get another 3. Or if we get another move down, 786, and we can have 5 waves, which we got here. 1, 2, 3, 4, 5. You can see it. They're pretty spread out nicely. Most likely 5 waves complete. Now that doesn't mean we can't move down to the downside. Because then this potentially would have to be relabeled. And I'd have to consider the fact, oh, is this actually ending diagonal? And I counted this wrong, right? But it does look like 5 waves complete here, just looking at it. So where does that leave us, right? Are we in the middle of a huge ABC here, where we're going to make, a larger correction and then we come down? Well, here's the nice thing about flat patterns, right? Our B waves cannot be triangles in flats. So we know if this comes down to the downside, it's most likely a WXY, then a 5-wave pattern, again, because of this area. It just can't be an impulse. There's no way it can be. So we'd be expecting this to turn into some sort of 3-wave pattern rather than 5. So if this is a W wave on the larger trend, we can get a triangle. And this would be a zigzag, ABC to the downside. This can turn into a triangle. So keeping in mind that scenario, we can come up here, 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 and come down. But again, we can't get a triangle in a flat, a 3, 3, 5. It has to be the zigzag family in a flat pattern. So we would expect this to actually be a WXY if we end up making a triangle here. So 3 waves after to the downside rather than 5. So I'm trying not to overcomplicate things, but I want you to understand all the thoughts that go through your head when you're paying attention to Elliott wave. But going off these rules here, it appears we have a completed pattern, ABC. Now, as I explained yesterday, when we retrace between the 382 and the 618, I usually target the 618 to the 786 for our next wave in an ending diagonal. When we come deeper than that, then I usually target between the 1.236 and 1.382 for our third wave. and then the 1.618-ish area for our fifth. So we'll do that now. Get rid of some stuff here. You can see that we got our flat ABC if we are complete here, and we'll pull our new pivots. But the question I have most about this setup is this wave here. That's the biggest question to me here. Is this a triple zigzag or is it a leading diagonal? You know, it's a tough one, just because it was such a hard sell-off, such a quick rejection. If it's a leading diagonal, that would be great for our trade setup. Like I said, we'd expect a 1.618 extension. So we go 1.236, 1.382. That's the next level I expect for this wave 3. Again, if this is an ending diagonal, these rules here, these extensions are just guidelines. But that's usually what I do. If we get a short retracement, I target the 618. If we get a deep retracement, the 1.236 to 382. And then we throw up the 1.618 for our fifth wave. And again, this wave 4, remember the new rules. We don't have to overlap with wave 1. It's the new rule. But this wave 5 must be shorter than wave 3. But the nice thing with this is it's usually a contracting nature either way. So you can put up your labels like so. And if we do hit target here, I'd go with the closer of the two. It would be about 1832 on linear and 1914 on log. And if this somehow turned into an impulse, although I think unlikely because of how deep our retracement is here, that would be up around 1914, 1823, and then we'd expect a 3-4. But you can see it's pretty close either way. Now, if we failed here, I would anticipate we would probably still be in a B wave if we just came down here. You'll remember this if you followed me on H bar. We can drop here, come back, then drop again, and this would make a running flat. This would just be a very complex B wave or X wave, where you have multiple things put together. This would be a zigzag, and we'd probably get another zigzag here, just on a smaller degree. But for trading purposes, this is how things have changed. And if we don't get impulsive here in the next little bit, and again, as soon as we break this level here, I want to tighten up my stop. I don't want to give any more room to that. And it would be probably a very slight loss if we come up here, trade above, go again. I'd move my stop to this level, and then when we take off again, I'd move up my pivots again. And I will show you that along the way, but as of right now, it looks complete. How are our extensions here? Yeah, we're at the 1.236 extension right now of A for C. So that looks good. I want to see us down at the 15-minute here, find support at this previous resistance. We haven't really broken through yet, but just drift sideways and take off. That's what I would prefer to see. Otherwise, I would have to consider the fact that this is a potentially bigger B wave. This is how those flat structures just destroy everybody, right? That's why I always try and pay attention to them, because as soon as this happens, obviously we are stopped out. But then all the people breaking out, trading that short, just get annihilated here, like almost instantly. And then everyone gets long and they get annihilated again. But that's the nature of the markets. They have to figure out how to destroy everybody. That's why I always look for these patterns, because that's the most likely way. As of right now, I like this trade setup, but we have to be aware that as soon as we come to this 1-to-1, right here, as soon as we come to this 1-to-1, I guess I can just throw it on here. That's already labeled. That's the most likely target, but technically as soon as we break this high of wave 1, this can all be an A, B, C, and this becomes a flat in itself, like so. A, B, C. So we have to be aware of all these scenarios. This is why I only put like 1 to 3 max counts on my charts, because you can see I'm paying attention to everything. I'm aware of all the possibilities, but if I put them all on the chart for you, it's gonna just overwhelm you, the options. That's why I put my main probabilities here that I think are happening, and areas to watch out, and where the pattern can change. But a lot of times what's nice is if we get this ending diagonal, or we just get this ABC, we're in the same direction, right? Which is great. And I believe the probabilities are the upside because of this wave here. Like this wave literally makes me say the probabilities are going to the upside, because I don't see how this is 5 waves. It's only 3. So, and we came to the 0.7 retracement, and then it appears we have 5 down. Again, I'm wrong if this isn't labeled correctly, but it appears like a completed flat. So after a completed pattern, a completed correction, we expect to move to the other way, right? Which is where we're at now. So both are kind of the same direction. I don't really see how we can come to the downside here. I mean, we have a 3, 3, 5. The only thing that would start with that is if we come back up here and this becomes a W wave, we pivot from here, come down, and then that becomes an XY, right? Or an ABC. But I just don't see how that's going to happen. It's just doesn't look correct. All right, guys, sorry for going on for that one. I just really wanted to explain why I take these setups, everything going on in my head. Again, paying attention to everything. This is my current long. But yeah, that's it for this one. Subscribe if you want to get the updates immediately. I hope this was helpful. And if you don't have all the rules and whatnot, I suggest getting the Elliott Wave Principle on Elliott Wave International and memorizing that stuff, because it'll make a huge difference in your trading. All right, guys, thanks for watching.